Hello, and welcome to the Investing Iguana, the show where I help you navigate the jungle of finance and investing. I'm your host, Iggy, and today we're going to talk about a hot topic in the world of stocks, Olam. Olam is a Singapore-based company that trades and processes agricultural commodities such as cocoa, coffee, rice, and nuts. It operates in over 60 countries and has a market capitalization of about $6 billion. Sounds impressive, right? But recently, Olam has been under fire for allegations of a massive fraud in Nigeria, one of its biggest markets. According to some news reports, Olam Nigeria and its subsidiaries have been involved in inflating their revenues, evading taxes, creating fictitious directors, and using shell companies to siphon off funds. These allegations have caused Olam's share price to plummet by 8.6% on Monday, the biggest drop since March 2020. Olam has denied all the accusations and ordered a review by its audit committee, assisted by external counsel and auditors. It also said that it has cooperated with the Nigerian authorities in relation to legitimate requests for information. So what does this mean for investors? Should you buy, sell, or hold Olam shares? Well, that depends on how you assess the risks and rewards of investing in this company. Let's take a closer look at some of the factors that could affect Olam's performance and valuation. Growth potential. Olam's growth trajectory has been notable for its calculated and ambitious expansion strategies. Over the years, the Singapore-based agricultural commodities giant has broadened its business portfolio, adding new commodities to its trading roster and diversifying its services. Equally significant is its increasing geographical footprint. Olam has made its presence felt in over 60 countries, often strategically entering new markets that complement its existing operations. Investment in technology has been a cornerstone of this expansion. Recognizing the impact of digital transformation on the modern business landscape, Olam has integrated advanced technological solutions to streamline its operations and enhance its market competitiveness. Furthermore, the company has shown a commitment to sustainability, incorporating eco-friendly practices and ethical sourcing initiatives that not only appeal to a socially conscious consumer base but also promise long-term operational efficiency. Olam is bullish about its future, setting an audacious goal to double its operating profit by the year 2024. These factors collectively underscore Olam's strong growth outlook, signaling the company's intent to continue evolving and scaling its operations in the foreseeable future. Diversification. Diversification is a cornerstone of Olam's business strategy, positioning the company as a multifaceted player in the global food industry. By offering a broad portfolio of products and services, from cocoa and coffee to rice and nuts, Olam is able to cater to various market segments, thereby reducing its reliance on any single revenue stream. This expansive approach is further complemented by the company's balanced engagement in both upstream and downstream operations. On the upstream side, Olam has direct involvement in the sourcing and production of raw agricultural commodities, giving it valuable control over quality and costs. On the downstream side, the company adds value through processing, packaging, and distribution, which allows it to capture higher margins and create customized solutions for its customers. This integrated supply chain model not only enhances operational control but also provides a natural hedge against the often volatile nature of commodity prices. Furthermore, by operating in over 60 countries, Olam diversifies its geographic risk, making it less susceptible to economic downturns or regulatory changes in any single market. All these factors make Olam's diversification a strategic asset, potentially offering a buffer against external shocks and market fluctuations. Debt level. Debt level remains a significant concern when considering an investment in Olam. As of March 2023, the Singapore-based agricultural commodities company had a daunting net debt of $9.49 billion. This financial burden is reflected in its net debt-to-equity ratio of 2.2 times, which exceeds the industry average of 1.5 times, thereby making it a relatively riskier bet compared to its peers. High debt levels often come with increased financial pressure, affecting both stability and liquidity. For Olam, the situation could worsen if interest rates rise, thereby amplifying its debt servicing costs. Another factor that investors must keep an eye on is Olam's credit rating. A downgrade in its credit rating would not only make future borrowing more expensive, but could also trigger covenants in existing loan agreements, creating a domino effect of financial complications. This combination of high debt and potential for increased borrowing costs can put the company in a precarious position, impacting both its short-term operations and long-term growth strategies. Therefore, Olam's debt level is a crucial element to factor into any investment decision, especially when weighed against its growth potential, diversification, and the recently surfaced allegations of fraud. Fraud risk. Olam Group Limited's shares fell sharply after the company denied allegations of a multi-billion-dollar fraud in Nigeria and ordered a review into the matter. The company said in a filing to the Singapore Exchange that it categorically denies the allegations and refutes all baseless and inflammatory statements. The group's shares closed 8.6% lower in Singapore, the biggest daily decline since March 2020. Olam Group's business in Nigeria ranges from animal protein to rice farming and grains, and contributes more than $3 billion of annual revenue. The company said that given the nature of the allegations, its board has directed the audit committee to conduct a review assisted by external counsel and auditors. The company was referring to two recent news reports in Nigeria, including one from the Daily Nigerian. Olam Group said that there are no fictitious Nigerian directors in Olam Nigeria and that subsidiaries of the unit are audited by Ernst & Amp, Young Global's member firm in the country. The company also said that it does not have a network of shell companies. Olam Nigeria has responded to, and will continue to cooperate with, legitimate requests for information by the relevant Nigerian authorities, the company said. As you can see, Olam is a complex and controversial company that offers both opportunities and challenges for investors. Whether you decide to invest in it or not depends on your risk appetite, time horizon, and investment goals. Personally, I think that Olam is a risky bet at this point, given the uncertainty and volatility surrounding its situation in Nigeria. I would wait for more clarity and evidence before making any decision. But that's just my opinion. You should do your own research and analysis before investing in any stock. That's all for today's episode of the Investing Iguana. I hope you enjoyed it and learned something new. If you did, please give this video a thumbs up, share it with your friends, and subscribe to my channel for more financial insights and tips. And don't forget to leave a comment below with your thoughts on Olam or any other stock you want me to cover in the future. Thank you for watching and see you next time on the Investing Iguana.